You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldandoilguy.com. Welcome to the show, Chris.
Hey, pleasure to be here, Jim.
You were mentioning before we went on air, you think we're at a major turning point for both the equity markets and for oil, gold, and silver.
I do, yeah. We've been kind of waiting for this for a long time. People have been waiting for the bottom in gold and miners, and people have been waiting for the stock market to top out for years. I know people have been trying to pick a top, for 3 years in the stock market. And, the time everybody has been waiting and waiting for, I think, is finally almost here. The market has one last kind of gasp opportunity, I guess you could say, before I think the major trends actually change direction. So starting off with the equities market, if we were to look at the S&P 500, the equities market in the United States has been eroding for over a year already. We've seen internals breaking down. The market's been going higher with fewer stocks. All the leading indicators and leading sectors are already in bear markets. All the signs are there that eventually these big caps are going to roll over, and we're going to see the major broad market collapse, and we're going to enter and start a new bear market. And where we're at right now is of just last week, 3 days ago, I had multiple cycles bottoming out. We hit a critical support zone on the S&P 500, and it shows that we've got about 4 or 6 more weeks here of, I think we're going to see sideways / higher prices. I think we're going to see the market go up, the S&P 500, test maybe that 2,000 point level, maybe go a little bit higher. And then I think that's going to be the last opportunity for you to get a great shorting opportunity to profit from the coming bear market. So what we have right now is an intermediate low in equities where we're going to see prices rally probably for a month or so. And I also have an intermediate low in crude oil showing we're probably going to see about a month-long consolidation and rally in crude oil. And of course, the flip side of that is gold, silver, and miners. They have had a huge run in the last little while here, breaking some previous pivot highs. So we've actually got what I call an impulse wave. An impulse wave means there's enough momentum behind it that it breaks the downtrend. It breaks all of the selling pressure, and it blasts through a couple critical resistance levels. And so we've seen this massive surge, and last week we saw gold, silver, and miners explode to the upside to really kind of change the overall trend of the market. And it's overdone. It's gone parabolic, meaning it went straight up for about a week straight, 2 weeks straight here. And what goes straight up usually comes straight back down, and that's what we're starting to see today. Gold miners alone today are down almost 8%, the index. That means individual stocks, many of them are down 15, 20% alone today. And so while we're seeing a low in stock market and in oil, we're starting to see that top form in metals and miners. So, there's an opportunity, there's several opportunities here to potentially get long oil, to get long stocks, to short the precious metals market. And I think this is going to play out, for a month, maybe even a little bit longer before everything rolls over, meaning we're going to see equities top out and start a new bear market. And we'll see gold. I think this will just be a consolidation in gold. And it'll be an opportunity to buy as it kind of consolidates over the next few weeks and pulls back. It'll be an opportunity to get long early on in the new bull market that is starting.
Now, of course, a lot of people might think, if equities pick up again, the down cycle's over and good times all over again. You don't think that's going to happen?
I don't. No, there's too many things have eroded. Like, there's always going to be a wild card. You never know what the Fed is going to do. Like, if they throw a QE4, that could be why maybe all my analysis is pointing to a fairly strong rally from where we are right now. We could see prices move up significantly, about 8, potentially 9% higher from here. And that could be because the Fed maybe comes out actually with QE4 and it throws some life into the market and everybody buys in and we see it go. But I don't think the Fed can save the market anymore. I think the gunpowder is kind of waterlogged, and it's not going to have the same effect. There's too much weakness in the market. Everything is rolling over and selling off in a big way. Big money is distributing shares. The sales aren't there. There's just, everything is really collapsing, and all they're going to do is maybe prop prices up for an extra month or two, but the overall bias and the cycles now are down, and the market's eventually going to get pulled down enough, and there's going to be a breaking point where the market just finally gives up on trying to hold up, and we see it extend to the downside. And I've talked about this with subscribers to my newsletter, that we've got a major cycle topping out here. And what happens is when a cycle kind of tops out and it's at support, which it is right now, once that support level is broken and that cycle actually breaks, you see that cycle extend twice the distance to the downside, which is why breakdowns in the stock market are so violent and so fast, very similar to what we saw last August. That was a shorter term cycle that actually failed and broke down, and we saw that massive collapse in August. Well, think of that probably being, 3 times larger for this break of the bear market. If people thought those 4 days of selling in August were big, they're going to have a rude awakening when they see something much larger, happen in the next month or so, when a big cycle actually breaks. And that is going to be the initial trigger of the bear market. We've been waiting for large caps to break down because it's a huge opportunity. You can make a fortune while the stock market collapses and falls. And that's what we've been waiting for. We can see it coming, and now we're just waiting for an opportunity to enter some long-term short positions, and that will rise in value as the market rolls over in the next month or so, and then goes into free fall for the next 6, 8, 12 months.
Now, what do you think about the Chinese government saying anybody who sells their stocks right now in Shanghai is unpatriotic? You have to keep your money in there even though you're losing your shirt, and because they allowed them to put their houses up to buy stocks, losing your roof over your head.
Yeah, that's just desperation, trying to hold things together. You know what? You never know where the bottom is. The last thing you want to do is keep holding on to something where everybody is moving away from, and you need to see signs of a bottom, but I don't see any signs of a bottom in that market. It's had a huge move down already, but there's always room to go further. Even a 1 penny stock can still fall 100% from there. So it doesn't matter how cheap something is, it can always keep falling. So you don't want to fight the trend. If the trend is down, any consolidation, sideways price action, or any bounce in the market, you want to just get out, lick your wounds, potentially take an inverse type of trade where you can actually profit from the next move down, because the odds are with a long-term trend that trend will continue. So you're better off to get out and give up on it. And you know what? I don't know if you've seen the movie The Big Short. I thought it was a great movie. I think it was one of the better finance movies, better than the Wall Street, all those movies, because it's something that's relevant. They had a quirky way of doing the movie. Have you seen it, Jim?
No, I haven't yet, but I will.
Okay, it's a great movie. They've done it in an interesting way, but what happens in that movie is happening right now. In the movies, these guys were calling for, they could see the housing market bubble about to collapse in the United States. And these guys made a ton of money from it. And what happens in that movie is happening exactly right now with U.S. equities. And it makes my hair stand up just thinking about it, because when I was watching the movie, I was like, wow, this is exactly what I'm living through right now with equities. Huge opportunity is for everyone to take advantage of if they can see it and understand what is happening. So you've got to see this movie because it's so timely with what the U.S. stock market is doing. It'll make your hair stand on end because we've got these inverse ETFs that anybody can trade. It's just like trading a stock. You buy this inverse ETF, expecting the market to collapse, and then when the market collapses, this ETF rockets higher in value, and you just clean up. You're betting against the economy, which feels so wrong, but they've created these tools to do it, and you can do it. So you might as well become the wealthiest you've ever been during one of the weakest times in the economy.
We'll have more with Chris Vermeulen right after the break.
Unbelievable harmony, spectacular performance, the ultimate tribute to the Everly Brothers and Simon and Garfunkel. Bird Dog and the Vintage Electric Band coming to Fort Langley, Mission, White Rock, West Vancouver. Buy online and save at ontourtickets.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, Japan and Europe have negative interest rates. The theory being, well, if it costs you money to put your cash into the bank, you'll put it into the equity markets because you can make money there, whereas in the banks it costs you. Do you think you're better off just to take it out of somewhere and bury it in your backyard?
Yeah, I do. You know what? It was funny. I was talking with my bank actually this morning, talking about moving money and how much you're insured to move certain lumps of money around. And it's really interesting. Even my bank manager was talking about, you need to break stuff up so that certain limits are reached and, everything is insured. And she's talking about how, she doesn't think this bank is going to, in Canada we've got pretty strong banking system, I like to think anyway. But she's talking about, she's even on her mind that, the bank would have to default and go under for you to actually, have anything bad happen here. But, to put your money somewhere, it started to get me really, really thinking, talking about it again this morning is, some of the safest plays, I think, going forward is going to be precious metals. There's so much uncertainty with currencies, and even more so with banks closing with all your money and it just vanishes. And, there's some worry about the bleed-through carrying over into certain types of brokerage accounts. Some of them aren't insured. Some of them don't have segregated accounts. So if they go under, your money vanishes, just like what was the big company that went under with everyone's money several years ago? MF Global, I think.
Yeah.
So, there's a lot of concerns, and, that's the big argument. The safest play, in my opinion, is to move into precious metals, own physical metals more so as an insurance, enough that you can, put it into some type of third-party vault that's not a bank, not a safety deposit box, and sit on a nice chunk of metals that if the whole economy crumbles and collapses, you've got some bars sitting back that are going to go from, for gold, we're trading at, say $1,200 an ounce. Well, if the whole financial system crumbles, we could see gold, and there's all kinds of guys out here who see the same thing. We could see $12,000, $15,000, $25,000 ounce gold because it could be one of the safest assets to own, and people are going to flee to it when they're scared to even have their money in the bank. They're going to go and want to exchange it. So, I think that the safest play long term, even though it's boring and a little clunky to manage, is to have some precious metals outside of the banking system, a good chunk of cash and cash that you can store for in case you need it.
How difficult is it for the average person to do that?
It's really, it's really simple. I've never purchased precious metals until just late last year, seeing all these things starting to come around and want to start to accumulate some physical metals, and it was very easy. I actually found the cheapest gold and silver. I could actually buy it from the States and have it shipped over, and it's still cheaper than buying it in Canada. Canada, we pay a premium for everything. We just don't have the people to make everything cost effective. But you just order it online, you wire money over, the package arrives, and you send it direct to a third-party vault in the nearest city. Wherever you are, you can have it delivered there or take it yourself, and they just charge you an annual or monthly fee. It is extremely easy, and I'll tell you, it's peace of mind. It's to know that I've got an insurance kind of policy sitting there in case the world collapses, the financial system. I've got a little nest egg there that should skyrocket in value. It is so nice to know that because I am concerned about the financial system, not so much the Canadian system, but who knows how things unfold, and sometimes issues kind of can spread like viruses from city to city, country to country, the banking system, because they all are intermingled in some way. So, something that doesn't happen in Canada, it still might have a direct effect that severely hits our market or banking system that we never ever thought of.
And of course, the former Harper government enacted legislation allowing bail-ins. In other words, if your bank starts to go down, they can take the money out of your bank account to help prop them up, just like they did in Cyprus.
Yeah, it's crazy. It's crazy. That's all I could say. It's not correct. I don't know why governments and politicians, it's a huge I don't even get involved in that stuff because it's so disheartening. But, we just need some people who know how to run a proper business and not go over budget and keep things intact. Like, just have a logical person in there who can make sense of stuff. But it's so corrupt. Everybody's paid off. It's just a complete nightmare. And I don't see there any light at the end of the tunnel. It's just going to be one scam and scheme after another. And until something, I guess, implodes, and maybe, I don't know how it'll unfold, but it's terrible to see that we're all run by people getting paid off and everybody trying to do all kinds of things that are more or less illegal, unethical, to their own benefit.
Well, I think it was J.P. Morgan paid a $5 billion fine for their role in the mortgage fraud in the U.S. During that period, they made $35 billion. So what's the disincentive for cheating people?
Yeah, exactly. I think only one person went to jail for that whole bank fraud and all that stuff. I don't think a whole lot, it's just insane what happened with that whole housing market. Credit swaps, all that stuff is just, it's frustrating. That's all I can say. There's nothing you can talk about. It's just BS.
Well, what do you think about these giant housing bubbles in Vancouver and Toronto? Vancouver especially, where we're told that 70% of the real estate bought over the last 6 months was by by mainland Chinese.
Oh, the housing bubbles are insane. I think we're going to probably see some air come out of those bubbles sooner than later. We're about to see the stock market start to roll over. Earnings are going to start kicking in, poor earnings, that is, which we've already started to see. And I think things are going to get soft, but it doesn't happen right away. Those bubbles will stay inflated for as long as they possibly can, and they usually kind of lag the market. So we'll see everything go soft in the financial markets. Everything will start to crumble. Those bubbles, especially real estate, they actually stay inflated and overhang for a while everything else is totally crumbling. That bubble will stay there afloat for a bit, and several months, potentially even 6-7 months later, and then finally it will burst, and then it completely collapses to catch up with everything else that's been crumbling for many months before that. So, I feel as though that bubble is about to explode, but it's going to hang on there for a bit more. It's like a feeding frenzy. We've got houses in our town that most of them are selling for more than they're listed for. They have multiple offers. They are gone in 2 or 3 days. It's a feeding frenzy, and it's going to take a while for this, I think, to dissipate, which plays out perfectly well with what I see with the broad market starting to top out in the next month or so. And then we'll probably see the housing market after spring. We'll probably see the final big push into spring, and then midsummer, I think the housing market will start to deflate, hopefully, because it is extremely expensive right now.
What about the people who bought a house for $2.8 million, which, by the way, in Vancouver, I think is the average price, and stuff under that? I mean, they sold a shack for $2.8 million. Really? I mean, a fall down shack.
Yeah, I know. It's our friends bought a place for about $800,000 in Toronto, an old little divey place. They put $150 into it. It looked beautiful. And then they put it up for sale, and they drove by about a week later, and it was demolished, and there's something new getting put in there. And they couldn't believe it, because they just poured all their savings to dress it up, to sell it nicely and fast, and somebody just came in and just completely annihilated it. And they're going to put in their own thing, and, they're going to have the same thing. You get a dive in Toronto for $800 to $1 million, too, a teardown more or less, and then you got to build another $800 to $1 million house to throw in there. It's just wild.
Well, in Vancouver last weekend, they had a big protest in front of a mansion that was built just a few years ago that was bought, and they plan to tear that down. The city gave them the permit to do it, so it's legal. And their big argument is not so much the financial side, but the ecological side, where you're going to be throwing all this brand new material out.
Yeah, I know. Yeah, the joys of feeding frenzies and money to be made. Everybody's eager to get into real estate and build their own dreams. And unfortunately, the last people kind of doing it get left holding the bag, paying a premium, and they won't see returns for a long time.
But is that the thing with real estate in Vancouver and Toronto, that we have had downturns in the realty markets, but they tend to bounce back rather quickly here? I think it's because it is relatively hard to get a mortgage in the first place.
Yeah, I'm not too sure about the whole mortgage side of things. I guess if it's really hard to get a mortgage, then that will definitely play into it. But really, the problem is there aren't a whole lot for sale. So when something goes up, there's a lot of people standing there waiting, and a lot of these places are going. There's no financing, and they all have to be clean offers. The ones that I keep seeing and looking at. So maybe that's probably one of the reasons you can't get a mortgage, and all these people who don't need mortgages are the ones, trying to get these properties as quick as they can. So it's a tough market.
Chris, I'm sure you're going to get a lot of activity at the goldandoilguy.com, I think.
I think so too. This is going to be very much so like the 2008, 2009. We're going to see everything here is going to start bottoming for those two commodities, and we're going to see some pretty strong moves going forward a couple of years. Huge opportunities. It's not going to be a straight line. There's going to be some trading and fandangling to make it work, but it's going to be a great streak here for the next few years.
The only time you get a straight line is if you have a Bernie Madoff in charge. And that's a warning sign.
Yeah, exactly.
Chris, thanks a lot for chatting with us.
Hey, always a pleasure, Jim. Thanks for having me on the show.
My guest has been Chris Vermeulen. His website is thegoldandoilguy.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our popular YouTube channel is Talk Digital Network. Comments or questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.